Hi guys, I trust and hope that everyone is well. Welcome to this week's show. And I trust you're making money out of the markets. Guys, so let's make it interactive. If you have any questions that you have, anything that you want to ask, please feel free. Just go ahead, pop it in the group there, and I will do my best to answer everything. In fact, I'll answer everything. So what I want to show is just a quick view. What I have on my watch list today is a sell on euro and sell on gold. So we'll get to that shortly. But here are 7 markets that will enable you. And the good thing about our business and our trading is that you can trade any market, any time of the day, and just fit it into your schedule, and more time. And I think these 7 markets kind of represent the biggest chunk of volumes going through this 5 to 7 trillion daily volumes traded financial markets. So Brent crude oil, this is what the chart is looking like at the present moment, daily chart. So I use the daily chart just to get a sense of where I should be focusing my attention. And once I have that, remember, I've always said that whatever bias I get going into the market, I deliberately hold it gently like a kid, okay? Like a kid holding an egg. So if I go in and my bias is sell, like I have on euro and gold today, and whatever market, whatever session I'm in, Asian, European, London, or American, if things change in that particular session, when I say things change, if the price action that is unfolding in front of me changes, then I'm very, very quick to change my mind. I don't remain stuck on a bias. But what looking at the daily chart does is it helps me to eliminate flipping through 7 different markets. So whatever you're trading, if you have more than 1, 2, or 3 charts, you need to be able to focus on a few things, because you can only hold so many things in your brain at the very same time. Now, another question you may ask is why this particular market? So my own view, my own selection process. I got a major in Forex, that's euro versus the dollar. I got 2 commodities, gold and oil, which I think represent a fair chunk of highly liquid commodities that we can trade. Then I have indices that are spread out among the top stock exchanges globally. US 500, okay, it's actually top 505 companies traded publicly in the US, but the US 500. FTSE 100, UK 100, again, top 100 companies traded in the UK, publicly traded. Hang Seng 50, top 50 companies on the Hong Kong Stock Exchange. And I think, although it's a big chunk of the trade on the Hong Kong Stock Exchange, it also gives you a fair access to the market in China, because they're Chinese, right? Hong Kong is part of the administration of China. Then Nikkei 225, Japan 225, top 225 companies on the Tokyo Stock Exchange. So you got a fair representation of markets that are highly liquid that you can trade as you go through. Now, quickly, Brent crude oil. This is not on my watch list at the moment, and the reason being is we're in a tight bull channel. And in a tight bull channel, unless I see a clear bounce off the 10 EMA. Remember, 10 EMA is what we use as an indicator of strength. And what it does, it just saves you having to open a chart and keep drawing trend lines, that track a strong trend. So that's why I use it. If I don't get a clear bounce off it, I don't put in a strong bull channel. It doesn't go on my watch list. a row in whatever the day does. So that day would have been on my watch list. Okay, but here nothing so far. So market is kind of bouncing off a very key level of resistance, and I think we can probably see it better. Let me just. So that's the weekly time frame that I've put just for us to have a look. So we are at a point where we can possibly create a double top with this high, and this high is 2018 high. So that's a key level of resistance that the market is at. And of course, we got to watch it and keep our eyes on it and see what we look at. So far, nothing for us to trade, but even said that, because we are at that key level, okay, if I get another test of that level and we get a double top right there, then the question becomes, are the bulls going to be strong enough to break above that, okay, and come back and test? If they do, depends how many days that takes, we'll be looking for ways to go long. If we get that double top and then the bears follow up with a strong bear candle, that closes beneath the 10 EMA and the 20 EMA, does not mean a reversal. All it means is that we enter into a trading range. And when you enter into a trading range, you got to trade as a trading range. You sell at the top and buy at the low. So at present moment, nothing on that. Nikkei 225, 225 companies is there. Let's have a look at that as well. Now, for those who kind of caught me in the about 15 minutes on Jeff and Ash show, Trading Buddies, I kind of say that when we were here, at that point, I had the Nikkei 225 because we were speaking during the day with that ended up as a strong bull candle. But of course, of the previous day, I had the Nikkei 225 as a sell. The reason I had it as a sell is that there's a micro double top here, so that's a double top, just a couple of candles. But more importantly, at that point, I was saying, well, there's a possible test of the breakout point, and the bulls at that point had failed to break above that. So if we had started on my lower time frame, if I had opportunities to go short, I would have jumped in. But as you can see, from when the market opened, it's just a strong bull trend. So was on my stop list, was on my watch list, but because it's on my watch list, it doesn't mean I trade it. It's just I look at it. So I kept on looking at it, but didn't get the opportunity. Now, here's what's interesting. This trading range here, this high that we have, 2021, and that low, okay, the midpoint is where we were. So there was also a very strong level of resistance, broke above it, strong level of support. So that's still a 50% level. Is a very strong magnet, invisible unless you plonk it in. So I'm going to leave it there and see what we get. So at the present moment, the bulls are trying to erase that bearish strength. Okay, and if they are strong enough to do that and give a pullback, that might be where they want to go. Now, here's what's important. One of the things that I've said before, that as a price action trader, the only way you are going to have the market come alive in front of you in terms of understanding what the charts are saying is just by printing out charts and writing on them. You have to go through hundreds and hundreds of charts. That's the only way things are going to start to make sense. And when this appears, whether it's on a 5-minute or a 30 minutes, whatever it may be, you can say, oh, okay, that makes sense. Here is the bull case. There's always two sides to the story. Is a bear case. So what am I looking at? Okay. Then you can start deciding how you want to trade on that lower time frame. Just stops us randomly getting into a trade. Now, question is, can we randomly get into trades? Well, if you want to gamble, you can. So all you could simply do here is just just go and buy for whatever reason. Put your stop here, then you know, okay, I got a 50-50 chance of making money. Or just go and sell and put your stop up here and 50-50 chance of making money. But we're not gamblers, right? We are traders. We study the market. We understand price action. Then you overlay with everything else. You look at whatever indicators that you use. The underlying thing, of course, is price action. Okay. What's important for us just also to bear in mind, if the market was to come down all the way here, okay, that's the Nikkei 225. And if the bears broke beneath here, how far do they want to go? They want to go that extent, measured move, which makes sense because that would be a test of these highs here, okay? But just something for us to bear in mind. And the reason I keep showing all of this is that for us to always know if we gradually come to grips with price action, nothing should take us by surprise. Mr. T, yes, those are moving averages. Let me tell you what they are. I use 2 moving averages on any time frame. Okay, so I always have the thick blue one is the 10 EMA, 10 exponential moving average. And I use that to indicate a strong trend. Okay, so as long as price bull trend, as long as price is holding above that 10 EMA, that's a very strong trend. Why is that important to me? Because I'm always looking to trade the first pullback to the 10 EMA. I don't trade breakouts, which is a bit of a strange thing to say because I trade the pullback from a breakout. So essentially, I'm trading a breakout, but not the actual breaking out phase, but the pullback of that. And as long as it comes back cleanly and gives me some form of a test, sometimes it's precise and perfect, beautiful. Sometimes it's not. But as long as it's testing that and failing, then I'm going to take that and put an entry beneath here. Same thing for a bear trend. This thinner blue dotted line is my 20 moving average, which I also trade a test off or a bounce off the 20 moving average. And usually by the time I'm doing that, I want to see it not just as a first pullback to the 20, but it could be second pullback, market price pullback again, comes back to the 20, then I look for a setup, and then I trade that. Or it could be a trading range pullback to the EMA, or one of those 3 push patterns, wedge, etc. Okay, great question. Yeah, guys, keep asking the question. Sometimes I just say stuff that's in my head and forget to explain it. So do ask. Hang Seng, Hong Kong 50. Okay. Again, not on my watch list. Now you might say, well, why isn't it on your watch list today when you have such a strong a bull candle? Well, because we have these levels of resistance coming up, number one. Number two, like I've just said, I don't trade the breakout phase of a trend. Okay, I prefer a pullback to the EMA. Why don't I trade the breakout phase of a trend? Well, most breakouts fail. Okay, the market is always trying to break out, then the market is always trying to make breakouts fail. So while you can make money, the probabilities are pretty high for failure. Okay, that doesn't suit my particular style. So you could trade that phase, but your stop always has to be at the beginning of the breakout. Okay, this is a bull candle, so you have to have a wide stop. Okay, so I prefer to say, okay, fantastic, good breakout. Let me wait for a pullback, then I can take a trade, same kind of stop, etc. So that's why that's not on my watch list. But what's important to note, that's a key level of resistance. Okay, so if the bulls are able to break above that, come back, test, do whatever, what is their objective? The objective would be to try and get to a measured move. Excellent. try to get a measured move to that level, which, as you can see, is not a random level. So the objective in just becoming really good at reading price action is for us to suddenly see, oh, hang on a second, nothing is random. And, the more computers there are in the market, the more traders, fantastic things become clearer and clearer. The patterns become clearer and clearer. So if a breakout above that, there's nothing random about that, because the measured moves to get there and test all of that level of resistance. Okay. Something else to bear in mind about where we presently are. And let's just put the weekly time frame so you can have a look at that. Okay. You see these levels here. Key level down here. 50% of that trading range is exactly where we are. So all of this price action is not a surprise to us. So that's where we are. So it's interesting to keep your eye on it, and I am keeping an eye on it, and I'll tell you why that I like it. It could be today, maybe tomorrow, but I want to see what kind of test I get of that level. Okay, if we get to that test and we get a 2-bar reversal like we got here, or any form of a reversal pattern that you might get a 3 push pattern, whatever it may be, and I see a candle like that on the daily, I'm definitely going to put it on my watch list on the 5-minute time frame. Now, here's what's interesting. Although I trade the 5-minute time frame, and once you are in trades, there's quite a lot to do in terms of management. But I'm not trading a lot. I'm not a high frequency trader. I'm looking for these setups. So you might wait quite a bit for a particular chart to get to a setup. But out of seven key markets, you might find 1 or 2 a week that hopefully you can catch the move and ride it. And we'll talk about that a little bit later on. Now, the reason I'm pointing that, if you get a setup like that here, when you look at the market, okay, fortunately for me, I've kind of made the decision with my kind of lifestyle that when I see that kind of setup, my kind of lifestyle means I can sleep less. When I see that kind of setup, I'm very happy to only put in 3-4 hours sleep and get up, at the beginning of the Asian session and look for a setup. I might get a good sell setup. Let's say it's like that, or it's like that, which I can hold for the day. Okay. Make sure my stop is in the correct place. Then I really don't have to watch it for the rest of the day. If it moves in my direction, I can come back. Partly in the London session, I can come back in the US session, without even have to think of building a position. If it so happens to be on that particular day, I'm sitting in front of my laptop and I have the chance to add on to positions, then you can add on to positions. So you don't have to be just jumping in and taking furious trades without a distinct strategy. If the high level of activity fits your strategies, brilliant. But if it doesn't, be very crystal clear about your strategy and wait for it to set up. So I'm going to wait and see. I'll come back end of day and see what we got. Maybe another bull candle, or might have hit that as a test and pull back. Then that will be fantastic. Then we can add it onto the time frame. Okay. FTSE, I'm not doing anything. UK 100 at the moment, the level of resistance. And this level of resistance, I think you guys, if you're tracking it, you kind of know so I've just brought it onto the weekly. That's the breakout bear candle when the world went into COVID lockdown, etc. So that breakout point is very key. I mean, there's been huge resistance around that. 3 attempts to break out above that. So at the present moment on the daily time frame, it's really let's wait and see what we get. Now, if today, so right now it's not on my time frame. If today closes on its low, okay, then I have a micro double top. It's closing on its low. Then on a lower time frame, my 5-minute time frame, I'll put it on a sell. Now, if I put it on a sell, what I need to bear in mind is that there is a rise in EMA here. So on that 5-minute time frame, even if the sale is triggered, this one is one that I want to manage throughout the day. So argument's sake, let's say it gets triggered in the Asian session. I want to come and check what's happening in the day. If I see a clear reversal in the area which is plus or minus the 20 EMA, and how would I know where that would be? Because the market tells us. So, okay. So if it closes somewhere down there, I mean, on a 5-minute, you'll have enough time to make some money. But if you're doing that, you got to make sure that if it comes to this level of the 20 EMA, gives us a clear, we've spoken about this before, a major trend reversal. There's always reversals. You don't have to close your trades. But when you see that the trend is reversing, all it might end up being is some sort of a bull test. The end of this bull test of the EMA and the bottom of the trading range. Then in that case, if you're in shorts and you see a major trend reversal, then you must get out of it. Okay. But if you don't see that, there might be a strong break beneath that EMA and that low, then just hold on to your trade until as long as you can. Hey, Soon, how are you? Don't worry about it. Just ask questions as we go along. So presently, I don't have FTSE on my checklist because of where we're at. You got a way to see what we get out of that. US 500 daily time frame. Okay, so this is approximating what we were talking about just now on the Hang Seng 50, the level of resistance that you got to watch. So that level of resistance, potential level of resistance is a key level that the whole market is looking at. Okay, so the question is going to be, when the day closes, if we get the market trying to break about that, and then we get a reversal candle, definitely on will be on my selling watch list, definitely. Okay, because that would be a failed attempt, which means on the 5-minute time frame, I'll have enough opportunity to take that trade. If the market closes up above that, there is absolutely nothing for me to do, whether as a bull or a bear, because I don't want to trade the breakout. I want to see success, come back and test. So this is definitely something I'm going to look at by end of the day and see what has happened for the day. Now, if you are in the market and saying, I want to find opportunities to take the trade, fantastic. There's nothing wrong with that. All you got to make sure is remain aware that if you're taking longs, don't just take your trades and go away. You have to manage it because you might get a dramatic reversal there and come back and give away all the profits that you had if you don't know how to manage it correctly. So you can still jump in and trade. I would rather just say, okay, fantastic, we might get there. Let me wait and see. If I was only trading this as a market, I would be in there trying to find opportunities, being aware of where the market is potentially going. How do we identify the reversal prices that we can take for the price very strong? Okay. So one of the patterns that we spoke about, I'm trying to see how best. Well, let's use this to illustrate it. This is perfect. Okay. There is one of our trading strategies is major trend reversal. So under the basket of reversals, we want to make sure we have a strong trend. So there's a strong trend, in this case, bouncing off this rising trend line. As you can see, it completely ignored everything else except for the moves in between the pullbacks. So very strong, deep pullbacks, very strong bull trend, deep pullbacks, very strong, deep pullbacks. The deep pullbacks created a trend line. So if you're holding on to your trades, and this can happen on any time frame, you gotta say, okay, I'm gonna hold on to this until I can clearly see a reversal pattern. A reversal pattern has a few ingredients. One of them is a strong break of a trend line. Okay, there's a strong break of a trend line. And then there's always an attempt for the trend to resume. So the bulls who created all of this, they know at some point that the bears are going to be strong enough to reverse that trend. And why would the bears be strong enough after so much strength by the bulls? Well, at some point, the bulls themselves have to take profits. Okay, you can't hold on to your trade forever. You can't hold on to your whole trade forever. So the bulls might say, okay, at certain points when I reach a measured move, so you could just say, when I reach a measured move, okay, so I've still got my full basket, my full 100 widgets. When I get to a measured move, I'm going to take off 50 of that. That's my measured move. Let me take 50 off. Now, because I've taken 50 off, I'm still holding the other 50, which I've been carrying, the balance of it, because I know at some point, while I'm taking profit, everyone else is taking profit at a measured move. But the bears are also going to jump to the market to try and reverse it. So that's not a surprise. But then the bulls who have been doing this are going to try and resume the market. So now we look after the break of the trend line, strong bear candles. We look for a resumption of the trend. And with the resumption, we're hoping to see whether we can get back to here and break beneath it. We don't want to see a lower high for your bulls. So if I see a lower high, then I'm going to say, I think this is time to completely liquidate my position. So you can make a decision when you start to see a lower high. Here, okay, profit taking, previous high, let's see acceleration back to it, which happened here. But now here we have a strong break of the trend line. If the bulls were strong, profit taken, they would immediately resist the bear price. Sorry, guys. They would, my apologies, that's my door. They would resist the bullish pressure the bearish pressure and just resume and crack through that again, which they failed. So if you see that, if you're still holding a portion of your trade, that's the best time to liquidate all your positions, because then you change your mindset. Now you say, okay, fantastic. I'm still bullish, but I'm now trading this as a trading range, because now we've entered into a trading range. Okay, so now you look to buy low, sell high. So you see double bottom. So bulls now come and buy this, but the bulls who are now buying this, they're not going to hold forever. They say, I'm in a trading range. That's the goal. If I get there, I'm going to take off my full position and take off half of it and see if we can create a breakout. So now it's trading range price action. So you're out of these long positions and then you just wait. So it's the trend line. It's the resumption that you're looking at. If you don't see that, then we're in the trading range, then you must take your profits out and start to trade it differently. At that point, you can now start to trade it differently. Okay, so US 500. As I said, I'll come back and look end of the day and see where we're at. Now, I have two markets that are on my watch list. Let's start with gold, that are on my present watch list. Gold is on my sell watch list. I'm looking for opportunities to sell gold. And why am I looking at opportunities to sell gold? Because for this strong bear move here, leg one, first leg, pullback, second leg, we are in a trading range. And I see that as a lower high. Okay, and if I see that as a lower high, then that strong bear candle, when I was speaking again to Jeff yesterday, that was one of my sell indicators of last week, because I was saying, okay, lower high, I expect the bears to have followed through, come and clear these lows, maybe clear the low, and let's see how far they go. But then we had a doji instead, bet for any sell signal, but I'm still bearish because of the lower high. And then yesterday, when I was talking to Jeff, I was saying to me yesterday, when the market had opened here with the failed follow through by the bears. Okay, so this red line is the low of yesterday. Green is the high of yesterday. So let me do this. just to show you the thing. I'll come back and explain the measured moves. So yesterday, that would have been the low I would have been tracking. And that would have been the high of the previous day. So having seen that yesterday, gold was on my buy, because I said, well, the bears failed to follow through. So let's see, the bulls are likely to buy, but the bulls are not going to buy and reverse all of this. At best, they're going to try and get to a 50% pullback of that particular move. And I'm cluttering up my chart, but I just want to show you something quickly. Remember, I've always said, I don't know if it's always, but I say quite often, you always, at the beginning of the day, there's basic things you just have to put on your charts. Low of yesterday, high of yesterday. You need to put the 50% pullback of yesterday's range, but also you need to say, if we get a breakout above the high of yesterday, what is likely to be the measured move? And the measured move will be the full range of yesterday. So looking at yesterday, the measured move would have been, okay, that high, from the low to that high in the measured move. Now, look how far yesterday went. The bullish move yesterday went to test exactly the measured move of that trading range. Now, is it a surprise then that we hit that and then had a sell? No. So it was a test of that breakout point, and then we had a reversal. Now, why would we have a reversal? It's a breakout above a trading range. That little doji candle is a trading range, and most breakouts fail. So you'd have looked for longs. Then when you hit that particular level, you'd have looked for shorts if you had been in the market. So that was yesterday's thinking. Now, today's thinking, definitely. Okay, so I'm moving this back to the way that we set up the day. High of yesterday and low of yesterday. Okay, measured move. If the bulls break above the high of yesterday, in the bulls' eyes, they want to, bulls' eyes. The bulls' eyes, their bulls' eyes to get to this high. That's the measured move of yesterday's range. The bears, and I've got it on my sell. The bears are saying, hang on, the range, yesterday's range is that if we break above the low of yesterday, our goal is to get here so that we can demonstrate strength and clear all of these lows, then have a follow through and see how far we can go. So the reason I have it, okay, then the other thing quickly, high of yesterday, low of yesterday, we have the 50% midpoint of yesterday, which we've kind of broken above, and the magenta line is the open of yesterday. So I've got on a sell again because of that lower high. Okay, the bulls failed to capitalize by being sold right into the end yesterday. And now all I'm waiting for is to see when I go down to the 5-minute time frame, if I get a reversal anywhere within here. Might get to test that high, which creates a micro double top, even better. Or it might just turn somewhere within here. Okay, so 5-minute time frame that we're trading. That's what gold is looking like at the present moment. And remember, I am looking to sell. So all I'm waiting to see is if I get an opportunity to sell. And just from experience, I've learned just to manage myself as much as I can, not to get lured into buying, even if I see a decent buy signal. Okay, with the way that I'm looking at the markets, because what will happen, it's very hard for most traders trading intraday to get into a trade, let's say in this case, jump into a bull setup and be focused on optimizing that bull trend. And then a reversal sets up. Okay, so reversal sets up, chances are you'll say, okay, maybe time to take profits, but it will be very hard to switch from strong bull mindset to bear mindset. By the time you do that, at least I take some time off, whatever it may be, 30 minutes, an hour, then come back and look at the charts. By the time, if you're able to do that, fantastic, do that. But by the time I do that, I've missed some of the opportunity, and then all sorts of mistakes start to set in, start to second guess yourself. And so I would rather not. And my advice is just allow yourself some time between setups. So if you're doing that and you say, okay, there's a reversal taking place, I'm taking my profits, allow yourself some 30 minutes, 6 candles on the 5-minute time frame. But in any case, remember my bias is short, and that's what I'm looking for. So because that was my bias, I was up early this morning trying to find them, but I couldn't get them. So when I saw this breakout, it's not a surprise. Good for the bulls. If you're looking to trade this as a bull, at a measured move, there's a pullback, and I'm saying, okay, if the bears are strong, we're going to get a double top here. We didn't get an exact double top, but we had a high double top, which was fantastic. And then we kind of went sideways. And as it turns out, when all of that is happening, then, you got to get up, you got to wake up your wife, you got to go for a run, and you got to come back and take the kids to school. And then, by the time you sit and settle down and you're able to pick at your charts, a lot of things have happened, and you're saying, I'm saying to myself, oh, good. It doesn't gone bearish while I was away. So now that I can still keep looking for my bear setup. So I am still hunting. So I'm just plucking the things I'm looking at. Measured move, okay. Nothing. So that high has been overridden, okay. That wedge 3 push pattern, which at some stage could have a higher probability of a strong bear breakout, couple of strong candles, lower high, and then I traded short. That didn't work. Now we have another move taking place here. And again, I'm looking and saying, okay, I'm not getting my setups, but I'm not seeing a strong bull market. So I'm quite happy to keep looking for my shorts, because if the bulls are strong, okay, you always got to ask yourself, if the bulls are strong, what am I seeing in the chart in front of me? Am I seeing strong bull trend back to the 10 EMA, bounce off back to the 10 or even back to the 20? Am I seeing a strong bull trend? Or is the market going up, but it looks more like a bull leg in a trading range, a lot of two-sided price action? That's what I'm seeing in front of me. It's two-sided price action. So I'm pretty confident to keep looking, keep analyzing, keep searching. It might just go on the whole day, or it might set up when I'm doing something else and I come back and look and I say, oh man, it's gone. If it's gone, it's gone. Okay, I don't chase after it. Wait for the next one. So far, just keep looking and saying, okay, there's a sideways price action. If we break above that, where are we likely to go there? So I'm not surprised that we're creating more sideways price action. And if we break above that, where are we going to go? So you might say, but George, aren't you disappointed that you're missing all this profit potential? Well, if my assessment is correct and we do get the bear setup, all of this is going to be profit that I'll be maximizing all the way down. And we might get a breakdown here if it sets up, which is fantastic. I'm not rushed. It might be in the American session. Might take place, this is our evening time here from like 3:30, 4:30 p.m. into the evening. The US session closes around 10 p.m. my time. So because I've got my setup on that particular day, I'm very prepared to get up in the Asian session, have a look, nothing there, nothing during the day, have a look at the American session. If it sets up, I'm just going to trade it as best as I could. Other things that kind of keep me confident about my bear setup. This is 3 pushes wedge pattern, attempt to break up, pull back, another attempt, pull back, another attempt. So that failed breakout is good because the bulls are not strong enough. So all of that is good enough for me. Trading range price action, failed attempts to break out. So I'm anticipating at some point that the bears are going to step in, but I need to see some couple of strong follow-through candles, not just one. I need to see 1, 2 strong candles, and then a pullback. Then I can look to take a short. So if this, let's assume this closes somewhere down here in the last minute, I need to see a follow-through bear candle closing beneath these lows. One is fine. If I see another one, fantastic. A strong bear candle or small ones, successive, then I know I've got a wedge pattern. Got to see the pattern, then I look for the setup. More than 6 candles. Remember, I said whenever I see my wedge pattern, I need to see at least 6 candles of separation between price action. Things have to become clear. That's why I always argue that the 5-minute time frame, if you're crystal clear about your strategy, is just the best way for you to be patient, you calm, there's no rush. So perfect so far, fantastic. At the measured move, no surprises there. I need to see a strong bear candle follow through, confirm breakout beneath that, then I wait for my pullbacks. Pullback to the 10 EMA, if I get that, I'm gonna take that short with the stop up here. Okay, so that remains there. Another one on my watch list is euro versus the dollar as a sell. Now, this is quite interesting. So this is today's setup. Okay, just checking that I got no question. This is today's setup. Low of yesterday, high of yesterday. The bulls break above that. The bulls, that's why, nothing is accidental when you look at price action. The bulls will say, if we're strong enough, we can break above here. And our measured move is the height of yesterday's range, which would take us to challenge this lower high. Okay, the bears, on the other hand, are saying, well, bearish price action. Okay, so yeah, fantastic. We've had a bit of price action. That's just a lower high. So if the bears are strong, they want to break beneath this low. And if they break beneath that low, the measured move of yesterday's range is somewhere down here, which completely reverses that. And then they're just looking for follow through, and follow through is to get to this level of support, which we've spoken about before. Then, of course, there's our midpoint, high of yesterday, low of yesterday, 50% pullback, always important. And at this point, market tried to break above that and failed. And the magenta line is the open of the day. Now, let me just show something. Based on yesterday, I was talking about it. So this is yesterday's range, yesterday's high, yesterday's low. I don't know if you can notice something, that at some point, double bottom here, bulls were strong, fantastic for the bulls. But whenever you see, you always say, have a look at what happens at the moving average. So we've had a close, bulls were happy. I want to know what's going to happen with the next candle. The bulls had an opportunity, if they were strong, to have given us a strong bull candle, but they didn't. Remember, this is the descending 20 EMA, the dotted one. So yes, they broke above the strong part of the trend, good, profit taken, but we also take trades that come off the 20 EMA. So we get to a test of the 20 EMA. If we'd had a bear candle, which is what we look for as our signal, be happy to put an entry above that and find out where we put our stop. Our stop is here, because we had a bear breakout beneath that low, so we can put our stop here. But we didn't get that. We had a bull candle, fantastic test, which at that point said to us that the bulls were not strong enough to break above the 20 EMA. But big question, if the bulls were not that strong, where were the bears? How come they were not strong enough to close beneath that level? So they bounced off the 20 EMA, problem. The following day, we had an inside candle. Okay, now whenever we get an inside candle, it is breakout mode in terms of price action. Okay, it's a converging triangle. At some point, the market is going to break out. So fantastic. We love those, but the context has to be right. Okay, so you can't be looking to trade short, even though you've got this selling into the close and tails on top and bouncing off the EMA, because the bulls are controlling that particular market. So once you see it, okay, inside candle, these are doji candles, these are trading range. So any break beneath the trading range, breakouts will likely fail. So you don't want to be selling beneath the trading range with wrong characteristics. So you see a break beneath that, you expect that to fail. So that's not a surprise for us. Failed break beneath that. And then we had an outside candle. So we had an inside candle, outside candle. So that's trading range price action. So when I was talking to the guys yesterday, I said, I have the euro dollar off on a sell as well, because this is trading range. If the market tries to break above that, it's likely to fail. However, when you were in there, the high and the low of yesterday, high of yesterday. So no surprise when you get to that, when you see that kind of reversal, which is a test of that breakout point there. Okay, so bearish price action, very happy with that bearish price action. And because we're happy with that bearish price action, I've kept it on a sell. Then I'll show you what we're presently looking at. Okay, so my apologies if you're picking up any noise in the background. Got some workmen here just doing some routine maintenance work. So high of yesterday, low of yesterday, okay, 50% pullback, we've got that, and where we expect the market to get to should we break out above that. So it is on my time frame. So this morning, on my watch list, not on my time frame. Okay, so all of this price action. So if it's on your time frame, you better be looking for ways to get in. Measured moves, not surprised by any of those measured moves to a 50% pullback attempt to break out, and it failed. So 2 candles, fantastic, very happy with that. Was still in the market then, but at that point I'm saying, okay, that is my turning point. Okay, so in terms of a setup, at a turning point, I now need to see a double top, even a lower high double top. That's perfectly fine. Once I see that, then I look for the entry. So remember, I've always said, you've got to see the pattern crystal clear. Then you got to wait for your setup. So that's fantastic. Then I'm saying, okay, all is well. And guess what we got? Nothing at this particular point. I would have wanted to see a test of that. The test came later, okay, in the form of a 3 push pattern, which is fantastic. Went up, came back, went up, came back. So that's a wedge pattern. That's fantastic. Now, at that point, what would you be thinking? You'd be saying, okay, if the bears are strong, let me now get strong successive bear candles. There's my setup. Then I just need a lower high. Then I can trade the lower high. Okay, but we didn't get that. Now, I came back into the market about here because this is the wake up the wife, go for a run, wake up the kids, let's go to school. But when I came back and I opened, I said, okay, I'm not disappointed. You know, I got emotions because I don't see a clear setup that I would have traded. Now, question is, George, with all these bear candles, why would you not have traded anything? Simply because the market didn't turn here with an attempt to break out again, sideways price action, and a resumption, which is great because now I'm saying to myself, what is happening here? All it means is that the bulls, although this is not a strong breakout, it's a bull trend in a trading range. So the bulls were strong enough to turn the market here. Okay, so that becomes my key level that I'm looking at. My assessment, that was a double top. So the way I'm looking at this now, that is still a double top, a high double top. Okay, or you could simply say it's a wedge. Every time we have a double top or a double bottom, double top, 2 pushes up, came back, up again, and the market tries to break about and fails, that's all patterns a third push up. 1, 2, 3. So that could be, consider that as a wedge as well. So many factors all saying, okay, George, so your turning point was actually not here. Turning point was probably here. If the turning point is there, let me see strong bear candles, couple of strong bear candles. Let me see a resumption. Then I have another double top. Then I can look to go short. Okay. But in any case, I didn't get that. So I'm assessing the market And I'm saying I need to see bear strength so I can jump into the market. And this is pretty important. Let me start with this because this happened this morning, a few hours ago. So that then became a key level. So still trading range price action. If your strategy is to trade in ranges and you find a way to get in there, you're only going to aim to get there or there. Okay, so there's nothing wrong with trading this as a trading range. Okay, but I'm looking for a proper swing setup that I can hold, break through here and hold as long as I can and optimize my returns. So I saw that and I said, okay, fantastic. We have a double bottom, but look at the bear strength. So maybe the bears are coming into the market. Let me see. I'm not trading this because I'm right at the bottom of a trading range. Let me see if I have a follow-through breakout. And guess what? It was presented right in front of me. So I said, brilliant. Okay, now I'm waiting for my pullback to the 10 EMA. Immediately we have a doji, and that presents a problem for me. Okay, because that's a trading range. And we have a trading range. Two things going through my mind. Okay, if we break above the trading range, measured move, it's up to, the EMA wasn't there, but it's going to be up to that level. But what I did, because of that doji, I know my probabilities are a bit low, but that's a pullback. That pause is a pullback. We could have gotten follow through. So I put an order beneath here. Okay, and when I put an order beneath there, I didn't put my stop here. Why didn't I put my stop here? Because the only way I would put my stop here is if I get if I was getting a pullback, market breaks beneath this low, and we get another pullback, then that becomes the legitimate point. So I had a 30 pip stop, which was at 30 pips, somewhere within there, which is above 50% pullback. I'm happy with that. Why would I be happy with a 30 pip stop? Well, because, it's a bit messy now, but let me tell you why. If I'm correct, remember that's what we say is the extension of yesterday's range. Somewhere within there, it's about 80 or 90 pips. So there will be an opportunity for me to get, 2 to 1, 3 to 1 return on a single trade. But if I'm correct, there'll be pullbacks I can build into the position. So I didn't get, it was not triggered. And now I said, oh man, if not triggered, okay, let me wait and see if I'm going to get a clean bounce off the 10 EMA. Okay. So I delete my order. I said that previously, that if I have an order in the market and if the order is not triggered on the very next candle, I take it off. If something else sets up on the next candle, so let's say I wasn't triggered and I take off my order, delete it. And then if we didn't have this bull candle, but we had an inside candle, which is breakout mode, bear candle, just got to do the work, got to place your order back in the market, same stop and wait. So when things are setting up, we can get quite busy. When they're not setting up, we just have to follow and see what's happening. We get to the 10 EMA. I'm just going to put this on the side because I want to illustrate something. So we get to the 10 EMA. We don't get a bounce off the 10 EMA. At that stage, I'm saying, there's still an opportunity to jump in here. If the bears are strong, they have broken beneath that level. Let's see what to get at the 10 EMA. If I got a decent break beneath the 10 EMA, let's say we get one of these kind of candles, bear body closing near its low, put your order in again, stop right up here, and wait and see what happens. Unfortunately, we got a bear candle. I mean, a doji candle. That is a trading range. Okay. And that's very important for me to point something out, because while we still have the 10 EMA, we had a setup in here, okay, which is a breakout mode. In a breakout mode, we have an inside candle and another inside candle. That's a very strong breakout mode, okay, in favor of the bears. But the problem is, if you break out beneath that, where you're going to go, that you cannot, that's why we trade bar by bar. You cannot ignore that candle, because that's a doji candle, that's a trading range. If it's a trading range, means you have to be buying at the, selling at the top or buying at the bottom. Let me just put it in Okay, so you see that so that's a trading range. So I saw that and I said, oh, pretty boring. There's no ways I'm gonna put my order beneath here. If I didn't have that, okay, and I had that setup, that would be worthwhile for me to put an order again, stop up here and see, how far we go. But although that's a setup, it's a trap. If you just look at that and don't look to the left, okay, because you would be holding on to your trade, of course. This case didn't get stopped out because your stop is up here. But you probably could be anxious and saying, actually shouldn't have taken that trade. And you don't have to, once you're in, hold on to your trade. So I didn't do anything there because of that trading range. Failed breakout, so not a surprise. And this price action here is not a surprise. Why is it not a surprise, guys? Even if you don't, just think about it, because we failed to break beneath a trading range. So the market breaks above the trading range, it's likely to get to a measured move. So when you see all of that price action, it's not a surprise. It's just a measured move from that trading range. And then more trading range price action, trading range outside, etc. And all that means for you is trading range price action right here. Okay, so now we've come back into that area. And it's not a problem because our setup, our watch list is still saying euro versus dollar is a sell. Okay, so what do you do from now on? If you're looking at it, keep a look at it. Okay, now here's another thing. I took my trade off here, my order off here, because I don't want to get triggered into a sell anywhere down here, because now I am in a bigger trading range. Now I'll tell you how you must then look at it going forward. So from the moment that I was not triggered here and I took it off, I'm saying, okay, that's the key low, right? And now we entered into a trading range. Remember, from any strong trend, we enter into a trading range. So if you'd been holding short for whatever reason, take off some profits when the trading range price action starts to kick in. All it means in a trading range, if I get a double top here, I have my setup, double top, lower high, double top in a trading range. Then I want to see bear resumption, another lower high, I'm going to take a trade. Okay, if this just stands and comes and creates a double bottom here, I'm doing nothing because I have a trading range. I still got to wait to see pullback. Now I want to see successive bear candles. That is still the magnet. If I can get an entry somewhere here before we get to here, fantastic. Okay, so question is, George, if we're gonna get into this trade, where would you put our stop? So you gotta look at the price action that unfolds for you. If you get successive bear candles, which is what you must look for, and a pullback, then your stop is not going to be 30 pips up there. Your stop is going to have to be just above the trading range because you've had the breakout beneath that low and a pullback. That's where your stop has to be. And if it sets up, then you just got to hold it if you're able to hold it. If you can't, you have to now just do a measured move and see where you can put your take profit. So those are the two present shortlists on the watch list, shortlist on the watch list. So keep an eye on it, and hopefully, we get a decent enough setup, and we just enter the sell. The other thing, of course, is if they both set up at the same time, remember the trader's equation: risk, reward, probability. You control your risk, the percentage of your capital that you're going to risk in the marketplace. Okay, you control that. And if you always risk total 1% for argument's sake and two setup, don't put 1% here and 1% there. You're going to have to just break it up into chunks, right? So that your overall risk is always managed. All right, guys, we've kind of just come to the end of our time. I hope you enjoyed it, and we'll catch up again next week. Enjoy and have a good week. Thank you, guys in the office. Sincerely appreciate it.